Hello and welcome back to the Volunteer Income Tax Assistance training videos. My name is Chris Moon. I am an Associate Teaching Professor at Iowa State University in the Ivy College of Business. This video is going to focus on the credit for child and dependent care expenses. So essentially daycare expenses. I will tell you, commonly people confuse the child tax credit and the child and dependent care credit with each other, and they are two completely separate credits, and I think the names are just a little close. And so just to make sure that if you have a client, a taxpayer with child care expenses, that you make sure if they're entitled to this credit that that it shows up on their tax return. So we are going to go through and determine who is eligible for the child and dependent care expenses and how the amount is calculated for the return. I will tell you this is a non-refundable credit, but you know, non-refundable credits do dollar for dollar reduce the taxpayer's tax bill, so it still is beneficial if the client qualifies for it. There are 5 eligibility tests that we'll go through, and we will talk about who's eligible and what kids or what children are eligible for getting the credit. All right, so the child independent care credit is non-refundable. It is applied against your tax bill, so it can reduce your tax bill down to 0, but if there is credit in excess of what your tax bill is, you can't get a refund for the difference. This credit can be claimed if you have a qualifying dependent and work-related dependent care expenses. And so there is actually on page G15 of your 4012, there's a Q&A that you can go through with your client to see if they qualify for the child and dependent care expenses, but they must meet all of these qualifications. The credit ranges from 20 to 35% of the child or dependent care expenses, and that is calculated by TaxSlayer, and it is dependent on income. So the percentage that they get of the credit varies depending on what their tax return looks like. The taxpayers may be able to exclude employer-provided dependent care benefits from income. And this, again, is a very important part of the intake form because you want to know if the taxpayer had daycare expenses, if it's a qualifying child, if it's a qualifying relative, and if they get other tax benefits. So just making sure you take the time, I know I sound like a broken record, to go through the shaded part of the intake form and make sure you answer all of those questions. So how do we determine the eligibility for this credit? The Q&A screening sheet on page G15 is really beneficial. Was the care for one or more qualifying persons? And in order to figure out who a qualifying person is, you look on page G14 of your 4012. It is a child who is under the age of 13. So if you have expenses that were incurred for a child that was 13 or older, those are not qualifying expenses, and it's not a qualifying person. Did you or your spouse have earned income for the year? If not, you can't take the child and dependent care expense. If you do, then you ask the next question. Did you pay expenses to allow you to work or look for work? This is one that we run into quite often at the university because we sometimes have students who are paying for daycare while they are in school. Those are not qualifying expenses under the child and dependent care credit. So it is really important to ask the taxpayer, was the daycare while you were working or looking for work? Were your payments made to someone you or your spouse can claim as a dependent? So if you used one of your other children to provide daycare for your young child, that's fine, but you can't get the child tax credit for those expenses. Were the payments made to your spouse or to the parent of your child who is your qualifying person? Again, if that's who you paid the expenses to, you can't claim the child independent care credit. Were the payments made to your child who was under the age of 19 at the end of the year? So again, someone who maybe you're not claiming as a dependent, but is your child who's under the age of 19 at the end of the year, can't take the child tax credit for that. If you're single, then it wants to know if you are single, then you go ahead and find out if you know the provider's name, address, and identification number. So it might just be their social number if it's an individual, but it might be their taxpayer identification number if it's a center. You need to make sure you have that information for the tax return. Did you have only one qualifying person and exclude at least $3,000 of dependent care benefits? If not, you can claim the child independent care credit, and it will be filled out on Form 2441. So I ended with the are you single? If you are married and you're filing a joint return, then you can go ahead and claim the credit. If you are meeting the requirements to be considered non-married, then you can file for the credit. So there are a number of different qualifying pieces of information for this credit. Okay, so determining the amount of the credit, it says use Form 2441, but I will tell you right now that TaxSlayer does a really good job of explaining that for you or calculating that for you. So you are going to enter the information and you will see part 1, 2, and 3 of Form 2441 filled out after you have entered all of the information into TaxSlayer. So if you need to show the client how the calculation or credit was calculated and that all of the information is provided on the return, you can show the client Form 2441, which will be filled out by TaxSlayer before you finish up the return. Part 1 is general information about the care provider. Part 2 is where the calculation is made for what the credit will be. And Part 3 is where employer-provided dependent care benefits are reported. Double check all entries. It is a common mistake that when you have dependent care benefits that are provided by the employer and those might be reported incorrectly on the return. So make sure Part 3 of Form 2441 is completed correctly if the W-2 has an amount in box 10, okay? So there is information on that W-2 that we need to double check even after we've filled it out in the income section, and dependent care benefits is one of those. All right, so the maximum expense amounts are $3,000 for one qualifying person and $6,000 for two or more qualifying persons. This is another one that was actually modified during COVID, so it's back to these amounts now for 2025. The credit rate is 20 to 35% of the taxpayer's expenses, but again, let's say you have 2 or 3 children and your expenses were $10,000. Well, that's fine, except the maximum expense amounts that are allowed for the credit is going to be $6,000. So TaxSlayer will help you navigate that to make sure you're not claiming too much. It won't allow you to claim too much, but if the taxpayer doesn't understand why all of the money wasn't put towards the credit. This is the reason. All right. Thank you.